Do you have any predictions for Bitcoin over the next 12 months?
I think it's going to go a lot higher. I mean, I don't know. 12 months is a good time frame. I just think long term, I've been telling people to buy it. We have a crypto newsletter. It's doing absolutely fantastic. You have to be very, very careful. The new generation of security tokens. We're coming out with our security token. It's going to be the first ever security token in the world to trade on a global exchange. It's going to be available to retail investors, something I'm very proud of. We've raised money through this for our company. You get a direct equity stake in Curzio Research. It's also paying a dividend. We just paid our first dividend. So the company's doing very well. But getting back to the Bitcoin question, it's important because a lot of these utility tokens that I researched, 90% are garbage. They don't report financials. People don't understand that you actually don't have an equity stake in these companies. You don't own equity. Meaning if someone comes and buys them for $50 billion, you get nothing. The value of the token is only the value of the utility of what you could use with that. And so Binance is a good example. That's a good token where you could use it to get discounted fees. You could pay for different things. So be very careful in that space. But for us, we avoided a lot of that crazy stuff, especially 18, 19. And our performance has been absolutely fantastic. But if you're looking at crypto, not just Bitcoin, Ethereum, Litecoin, the bigger names, you're going to see more and more money being allocated. And Bitcoin, we just saw a major company in technology actually, instead of putting it in cash, they're actually putting some of their cash reserves into Bitcoin. So Bitcoin's here to stay, and it's a great, great play with interest rates remaining super low right now, and also with the yield curve control that I expect to be put in place in September.
I'm a young millennial who is still living at home with my parents. Would you suggest looking for a house sooner rather than later if YCC is going to be imposed?
I would, but you don't want to spend your life savings on it to the point where you can't even buy a soda to put in your refrigerator. So I would buy a smaller house, assets if you can, and you're looking at gold. I think Bitcoin's going to do good. Stocks are going to do good, but you don't want to, where interest rates aren't so low, mortgage rates, and you're a millennial. If you're going back to, people who are watching this who, bought the house in the 80s, and if they were in a coma and just woke up, they'd be like, what the hell's going on? Because, mortgage rates were double digits. At 3%, that's incredible. So if you could borrow money for 30 years at that price, it's definitely worth it, but not to the point where you're just going to spend your life saving, because there's a lot of opportunities in the market right now. And remember, we could all be wrong on this. I mean, maybe it's not gonna be bad to buy a house, but a house, especially a personal house, it's tough to buy as an investment. Everybody who owns a house knows they're money pits, but it is a good opportunity because every single asset what the Fed is doing is going to continue to get inflated. And I love the fact that you're asking me as a millennial, because that's how you should be thinking, because so many of you I see are just, social media going crazy. I don't care if you do that, but if you want to make money, this is what you have to do. I hate that the Fed's doing this, the Fed's doing it. So just, that's what they're giving you. I would buy assets, but not to the point where you're spending everything that you own on a home. But if you can afford it, definitely do it.
Do you have a stock recommendation for emerging markets?
No. After just saying that would look bad. I think you're going to, I would stay more with the US. If you're going to go emerging markets, a lot of these companies trade as advanced depositories, ADRs on the exchange. You're better off, because even with China companies, how they're removing China companies from the US now, and the JDs and stuff like that, I'd be a little careful, or buy an ETF. But I just think the opportunity in the US with super low interest rates, it's the best place to be. It's going to be even better now. We broke through new highs, which if you look at data dating back to when the S&P 500 became 500 companies in the 50s, the best time to buy is when you see these breakouts to new all-time highs, which again, it goes against conventional thinking, right? You think, well, I want to sell at highs, but when we break through it, it's a very positive sign. We had trouble breaking through, and now we finally broke through. If you're going to go to international markets, I wouldn't buy mining companies in the international markets unless it's a mine-friendly jurisdiction. Be very, very careful, because those governments could just say, hey, you know what, we're going to take all your profits and you're done. I would look for an ETF in places of Europe that are doing good, maybe the UK, Spain. Those numbers are going to start getting better and better, which were the worst hit. But that's how I would play the emerging markets or international markets.
Which sectors particularly can be safe havens?
Sectors that could be safe havens, I would say consumer staples, but consumer staples have run up tremendously, right? So I would look at companies that pay a yield. And people think that Microsoft and Apple are going up tremendously. These are companies that are doing well on earnings, on sales. One of the biggest component, I think, is that dividend. And you say, well, Frank, they both pay like a little bit less than 1%. That's much, much higher than the 0.5, 0.6 in the 10-year. And the fact that you have that much liquidity where these are $2 trillion companies, now you're seeing fixed income money come out of fixed income, and going into these names that provide growth and a much better rate. That's a big difference between 0.6 and 1%. So my point is that if you're looking at stocks that pay a yield that are growing, that are in the right industries, which you should know, some of those are going to be a little bit expensive here. That's one way to play it as a safe haven. I'd like to say gold is a safe haven, but it's tough because what we've seen with the market is everything truly is correlated. When the market comes down, gold comes down, Bitcoin comes down, everything comes down at the same time. So cash is always a great alternative. I know the bond, gold people are going to cash is going to get the strip cash. It's great if you want to buy treasuries, if you want to be super conservative, but I would focus on stocks that pay a yield because you're going to see money continue to flow out of the bond market into these markets, especially when they announce YCC. That's the best way to play it, where not only is it going to provide safety because they're like consumer stocks and they have that yield, but they're growing. They could provide you with excellent capital gains on top of that yield, and they provide a level of safety.
Can you recommend an ETF or fund for the risky assets with big potential return?
I tell people to avoid the 2x, 3x ETFs. I would go 2x rather than 3x because it's not like the true correlation. That means, say if you're buying the Russell and you're buying a 3x, if it goes up 10%, it should go up 30%. But in today's market, you could North Korea, we could have a war in North Korea. We could see, the president elections coming up. There's a lot of risks in the marketplace where, we could see a 10% pullback, and next thing you know, you're down 30, 35% in a couple of days. But if that's what you like to do, I've never seen a billionaire. There's not a billionaire in the world that became a billionaire without taking on excessive risk. So I'm one to say, hey, if you're young, take on risk, that's fine. Excessive risk. But if you're going to risk all of your money, make sure those returns are 5x, 10x, because that's not a bad risk return. Some people risk all their money to get a 30% return. That's not good. So if you're asking, I would say the Russell is probably your best bet right now. I think you're going to see rotation out of some of the largest technology names. They're going to hold their value and do okay, but small caps are really going to play catch up here. And, you just want to own them. I think an ETF and a Russell would probably be best. There's like 5 on them that you could buy. It depends. I picked the one with the most volatility, most volume.
Do you have an opinion on cannabis stocks in the next 6 months?
I love cannabis stocks. I've invested in cannabis stocks. It's a market that's booming right now. So this is the first time, right? You see these waves of new industries. It used to be a cyclical industry, and it used to surge before elections because you see more and more states approve. I think it's 13 that have full approval for recreational use, and a lot more than that. I don't know, it's like 25 or whatever it is. You guys probably know exactly what stats there are, but for medicinal use. But all these states are going to have to approve this and gambling, online gambling, because they're in so much debt. They're laying off city workers. We see what's going on with the federal government, not really, caring so much about some of the cities that are going crazy and funding them. And that's going to lead to this industry really taking off. But right now, with more people home, you're seeing more people use it. And that's a fact. If you look, this is the first time this industry is really generating profits, right? It was all like hype and yes, this is going to happen, all this, and Canopy buying all these assets and going crazy. You're seeing the underlying numbers get better and better. Revenue numbers are at all-time highs, record highs. You're looking at, they're starting to generate earnings now. So if you're looking at cannabis, it's a great industry. It's still early to get in. You can make a lot of money.
What do you think of the ETN 3x leverage on silver?
Again, 3x is a little crazy. I think silver has made its move. I don't like to buy things when the whole entire world is one way and everyone in the world thinks silver and gold is going higher. So we could see a little bit of a pullback. Again, YCC is going to make sure that that's a good play of the dollar going lower. We know when a dollar goes lower that we see gold and silver go higher. Just be very, very careful. I mean, silver could easily come down 15, 20% and still be very attractive because it's moved up so high. 3x is very, very dangerous. If you're a true believer, you're going to make a lot of money in that. But I would instead of that, really, as an alternative, I would buy something like First Mining Finance, like kind of almost pure plays on silver, where if the market does come down, you'll see less of a hit than the 3x leverage ETF, and you still have that access to silver. And plus, those companies are really doing well. Their profits are surging right now. Again, it's a buy producer that's more of a pure play. I think that would be better in terms of risk reward for you. Because if silver does take off, yeah, you'll earn 3x. But if silver does take off, these things could go up 2, 3x as well. So that's how I play it.
What will happen to the VIX when YCC is announced?
The VIX is going to go a lot lower. That's what's going to happen. I mean, it's basically you're looking at the safety of the market. That's what the VIX is, right? If the VIX explodes higher, you're going to see more people nervous about the market. Once they do this, and I truly believe that that's not factored in. I mentioned Scott Minerd, I mentioned Jeffrey Gundlach think this is going to happen, and even other bond managers are saying if this happens, buy everything. Right? That's a quote, which is incredible. So if you're looking at volatility, if you want to play volatility, for me, that's not the play here. But you're going to see volatility go lower because the market is going to move higher. When the market moves higher, usually you see volatility index move a little bit lower. So I think it's going to remain stable, a little bit lower. I wouldn't be playing that on YCC. There's just so many other ways to make money than trying to figure out the volatility again, which could spike. And we're heading into elections, so be very careful. It's going to be a lot of risk, a lot of news, a lot of craziness going on, especially over the next couple of months with these news stations. And it's pretty wild out there. Some of the things being reported. There's no pure news stations that report real news anymore. It's all BS. So be very careful. And some of that stuff does drive the markets.
What do you think about the big exposure in the Nasdaq with Apple, Microsoft, and Amazon?
Yeah, I mean, I covered that before. They have massive exposure that's going to continue. It's not just those three. It's FANG plus Microsoft amounts to about 22, 23%. The good news is all those companies, you're seeing profits explode, earnings explode, they're all growing. So as long as they're growing, you're going to be fine. And that's, it's scary that they represent that much of the index, but it would be scarier if they weren't growing as fast. And they are putting up amazing numbers, record numbers almost across the board for those companies. So.
Would you buy TPL, Texas Pacific Land Trust, for the water rights?
Very good. Someone's been following me. That my late dad, I followed in his footsteps. He was an analyst 25 years, ran his own company, recommended Texas Pacific Land Trust. He called it a self-liquidating trust where, from the railroads, it's the longest running company in New York Stock Exchange with profits. I think it's like 100 years, consecutive quarterly profits, whatever it is. TPL owns a massive land package in Texas. They do get rights on some of the royalties. All the land they sell, they used to buy back the stock. But now it's even, they changed that structure to the point where it's more like, close to a REIT structure, not that they're paying out that much. But it's a real estate play. It's an asset play. And if you want another one, buy Maui Pineapple and Land. That's another land play. It's boring. You're not going to see any coverage on it because you never need to raise money investment fees, but it's a stock. My dad recommended TPL at 7. It went to 800. And, it takes a while. These are land plays, but assets are going to continue to get inflated, especially land, especially U.S. And Maui Pineapple Land is just perfectly positioned where they own some of the greatest resort real estate in Hawaii that's extremely, extremely undervalued. And with interest rates low and YCC, you're going to see assets inflate. So TPL, yes, I would definitely be buying here and scale into it. It's a volatile company. If you want to get in touch with me, frankcurzioresearch.com. You can visit our site at Curzio Research to get CVO if you're interested or anything else. Feel free to ask me questions, anything you want. Really appreciate you guys watching.